Imagine you're sitting in Omaha in the late 1990s, sharing a quiet moment with Warren Buffett. The Oracle doesn't just pick stocks on a whim, he builds a portfolio like a craftsman assembling a masterpiece. But here's the catch, it's not just about the stocks themselves. How do you balance risk, spot value, and keep a grip on your investments over decades? That's the puzzle Robert Hagstrom tackles in the Warren Buffett portfolio. Buffett's secret weapon isn't a sprawling collection of random stocks, but a focused selection. Why does less often yield more in the investing world? Let's dive into how focus investing sharpens your edge. When Buffett bought large stakes in companies like See's Candies and Washington Post, he wasn't dabbling, he was doubling down with conviction. These weren't random choices, but a curated handful of businesses he understood deeply. Over decades, this focused portfolio consistently outperformed sprawling index funds, proving that a few great stocks beat many mediocre ones. Think of focus investing like using a microscope instead of a wide-angle lens. Instead of spreading your attention thin over hundreds of companies, you zero in with incredible detail on a handful. This way, you spot flaws, strengths, and hidden value others miss, much like a jeweler inspecting a diamond for imperfections. The result, investors who adopt concentrated portfolios, sometimes as few as 10 holding companies, can see compound returns that dwarf the market average. Focus doesn't just reduce noise, it aligns your investments with solid business fundamentals, turning portfolios from cluttered forests into carefully tended gardens, yielding richer fruit. Buffett doesn't buy stocks, he buys pieces of businesses. So how do you peek behind the ticker and grasp the real economics driving value? Let's unravel the art of understanding companies below the surface. Buffett once said, "I'm not buying stock, I'm buying into people." Take Bill Ruin of the Sequoia Fund. He built success by betting on capable CEOs who consistently outperformed expectations. Buffett's partnership with Charlie Munger also sharpened this idea. Management quality is a crucial signal that a business will thrive long-term, even when markets wobble. Imagine a medieval moat protecting a castle, Buffett's famous term for economic advantages. These moats can be brand loyalty, patents, or cost efficiencies that keep competitors at bay. Investing in companies with deep moats means your money is shielded by barriers others can't easily cross, giving your investment staying power. At the simplest level, a stock price is a guess by millions of investors about a company's future. But Buffett reminds us that it's the business's actual ability to generate profits that drives returns, not daily market noise. So focus on the company's health, not the ticker's twitch, a calm approach that yields steady growth. Picking great stocks is one thing, but managing them over time, that's an entirely different ballgame. How do you know when to sell, hold, or buy more? Here's Buffett's playbook for portfolio management. Buffett famously held his shares in Coca-Cola for decades, ignoring short-term market crashes. His calm allowed compounding magic to work its charm. Selling out of fear often locks in losses. Buffett's message is clear. If the company's fundamentals remain strong, steady hands win the long race. Dividends aren't just pocket change, they're seeds for more growth. Buffett reinvests dividends to buy more shares, supercharging compounding returns like a snowball rolling downhill. Over years, this reinvestment magnifies wealth far beyond the initial outlay, an elegant shortcut to exponential growth. Many investors think buying many stocks reduces risk, but Buffett warns of spreading yourself too thin. Over-diversification dilutes your best ideas and wastes capital. Instead, a focused portfolio lets you monitor and understand your holdings deeply, capturing outsized gains without drowning in complexity. Remember sitting with Buffett in Omaha, the quiet confidence in his eyes as he spoke of focus? Now you see why. The Warren Buffett portfolio isn't a grab bag of stocks, it's a finely tuned engine powered by deep understanding and discipline. Next time you pick a stock, try this: pick fewer, know them better, and hold steady. Your portfolio will thank you. Subscribe for more book summaries like this one.